Cool. I'm in.
All right, let's
Let 'em all in.
let's let everybody in. All right. We are everyone's popping in here. We'll let everybody in. Let's wait a couple minutes before we get started. Happy
Why do
Monday.
you like to wait a few minutes to get started? I'm just curious. Does
Just
American
because-
Airlines wait 8 minutes after the scheduled departure for everybody to get on their plane? I'm just curious.
It's technology, buddy. Technology.
Is that how we do things? So
Well,
1 o'clock doesn't really mean 1 o'clock. It means 1:05 now. I'm
Well,
just asking. I think it's a good
if
question.
we have 100 people in the room and you got to
If you reward people for being late, then that's exactly what they'll get. Be late.
right.
So yeah, let's not wait. Let's go on and get started. They're all in there, man. We don't want to make John wait or Will wait or Susan wait. They were on time. They did what they were supposed to do.
Right.
You penalize them. No, let's just jump in it, man. Let's go in it. What do we let's see here. What
Well,
we can start with?
I will well, before we start talking about the perfect note and some of the things that are some of the top items that we talk about that are really important to us when we create paper. Obviously we buy notes, but we also create from scratch, and what some of the things that happen when you do it right and when you do it wrong. A couple of housekeeping items I want to bring up, because I was looking in the Facebook group. Like, as you guys know, Nick and I are not we're active in the Facebook group to review and come up with information and be able to share with the group, because responding to one-off questions in the group to me is not as efficient as sharing those questions with our group as a group. Because if I talk to one person and answer that one problem, or talk to one person and share it with 100 people, I think we all benefit that way. So that's one of the things that I think's been really, really good in the group. The other thing we talked about, Nick and I, there was some questions in regards to the transaction coordination. And
hey, real quick, LV, I don't see that question in my questions. Are all the Facebook questions updated so we can go through this? Because I don't see that one even in here.
What question?
The one regarding constant close.
Constant close was a message from Marie, actually, and there was some stuff going back and forth on there.
Yeah.
Oh, it was actually posted. It was actually posted in the Facebook group.
Yes, it was,
Yeah.
but since you did a follow up with her, I didn't want to.
No, I understand that, but that's what I'm trying to make sure, so everybody can benefit from it. Those are the kind of things that we want to address. Eric's going to talk about it here in a second, but we want those in the Facebook questions and answers, because that's exactly why we take the first part of the call to go through these things, so we can collectively work together to discuss and solve problems. So make sure you guys post those questions in the Facebook group. Don't send them to support, and then we'll make sure they get updated in here. So because I don't have that question in there, so we want to make sure we have it. So Eric, if you have it, then you can just go and address it.
There's nothing to have. It's what I was talking about it, and so that there was some concerns about constant closes. So we have people in our resource guide that we vetted and we use, okay, ourselves, but outside of Arizona and Texas, Constant Close was a company that we were for a long time. We know Rochelle directly, and she's someone that we know, like, and trust. There was some questions on their ability to respond to get back to them with calls or emails, or just to get back to people. And so we made it a point to ourselves to go out, and when we have those concerns with our vendors that we recommend, we want to go out and actually have a conversation with them, make sure that they're fulfilling what they're supposed to be doing or say they are. Here's the deal. The market today and 6 months ago is different. Okay. We're in a really, really interesting market, which is really cool for us and what we do. Nick and I will tell you, we've been waiting for this for 10 years to have the opportunity with inventory going up and interest rates going up, and the fixed interest rates that are out there, and all the stuff that we do in our business. This is a really good time in our market for us. And so anyway, So what I want to say is if those vendors that we are recommending in our resources, we're not affiliated to them. We don't have ownership in them. We just recommend them because we know, like, and trust them. So if there's ever
But I
issues.
want to make something perfectly clear to everybody that's listening on it. There's a big difference between booking a free consultation call and actually paying and getting a response for something and not having somebody respond for something that's paid for. Okay. Two different things. Okay. So let's make sure we clearly define what that is, because if you pay to have a transaction service done, whether it's through Constant Close or USA Home Partners, and you're not getting the response, we need to know that immediately, because you paid hard money to get something processed.
Right.
That's different than booking a free consultation call to see if it's a good fit for you. Okay. That's different. So let's make sure that we understand the two, because they're doing us a favor and you guys a favor by even spending the time to see if you guys, we don't want you wasting your money, right? So that's why we have it set up that way. Same thing with Prime Corporate Services. They're allowing you to have a free consultation to make sure that you don't just, haphazardly go blow a bunch of cash on something that you may not even need today or maybe even need in the future. So anyway, I don't have anything else on that. Do you, Eric?
No, it's just like, and we'll get to the questions here in a little bit in the chat, but we have vendors we recommend, and then they have their own, itemized fees for each different type of service they provide. And, if they work for you guys and if they're not doing what we think they should be doing, just let us know, and then we'll contact them. Either through support@creativedealmaker.com is the best way to do it. And we can help you guys out. That's how we have this community. That's why we created Creative Dealmaker, to be able to share all the things that are working for us and then working for other people in different parts of the country, or in different, different parts of what we do, which is note creation. So that's kind of the what else do we have here? I just want to make sure I have everything for the housekeeping items. I think that's basically it. I want to say that when we go into the perfect note, we have some things that we want to go into. But I will tell you, I will give you an example of a note that I've been being paid on for, I don't know, 55 months now. I get $1,447 a month, every single month, and I have. And the market's been good, so that house is appreciated, and my loan to value is really good. My investment to value is really good. And that note was created on the front end correctly. It was, I had my agent involved that helped me sell the property, and all the documents were done. All the taxes, insurance were serviced. I used the right servicing company. I didn't self-service it. And literally, I can't tell you, if I spend 10 minutes a month on that deal, if I spend 10 minutes a month looking at that transaction, it would be a lot, because I just scroll through to make sure everybody's paying. Well, those are people pay. So this type of stress that I deal with that acquisition and disposition. So I bought the house, created a note, or sold the house, created the note, kept it. Okay. Then there's a deal that I did where I did it haphazardly, and I bought a house and I created a note. I didn't get it serviced correctly, and I didn't have the taxes, insurance escrowed, and I spent a lot more time on that asset. Just because it's a pain in my butt, because I'm not sure if taxes are paid or insurance are paid and all this stuff. And so the whole point of this today, to talk about the perfect note, is why Nick and I do what we do. We're not landlords, okay? We are in some aspects, but not in this particular asset class. And the amount of effort and time it takes, if you do it right on the front end, the amount of effort it takes for you to manage your notes. So that's kind of the point to what we're having. That's kind of the premise of the call today, and or the Zoom today, and that's kind of where we're at. So Nick, you want to pop in and
yeah, I'm going to just go through a couple questions that we have here, and then we'll jump into some of the other stuff. So
okay.
So somebody in the group said, "Hey, I'm here today, looking forward to connecting. How I can offer quick loans, great rates, 100% financing. Okay, great. This is sort of goes back to what you were talking about earlier, Eric. I don't know who Alfred is. He could be a good dude. I don't know, but you guys got to vet your own guys. Okay. If it's not in a resource center, we haven't vetted them. Okay. Just understand it. Doesn't mean there's not good resources out there, and we need more resources to add, but we have not vetted Alfred. I mean, Alfred, if you want to send something over and you want to share something more than just a post, if you're even on this call, cool, man. We're always looking, but 100% financing, what does that even mean? I have no idea. Is it 100% financing got a 27% interest rate? Is it only 100% financing in 2 markets? I don't know. So it's a very, there's a lot of information there that's missing that we need to know if we want to do stuff. Okay. So just FYI, guys, just because you see it this is a community to collaborate with. Okay. There's good people in the community and there's bad people in the community, and we can't vet them all personally. I can just tell you that we're going to do our best on our side to do what we can do to help everybody out. But just understand, it's like anything else, you have to be diligent in whatever it is that you're trying to do. So Gilbert says, how are people finding deals to structure first and second liens like I teach? Well, remind me, Eric, and we'll pull up my last email from today that I haven't even gone through yet. Let's see how many people are in there. They're everywhere. God almighty. So many damn deals out there. It's not, I'm about ready to start canceling people and say, I can't find deals. You're not looking in the right place. Oh my God. I'm not even looking, and they're just showing up on their doors. You guys got to remember one thing, really, really important in all seriousness. The market has changed. The market has changed. It's changed in the last 3 weeks. It is not the same market that we're doing. I was just talking to the guy that's in the office next to me, and he goes, I just put an offer in on a house. I go, cool. I go, did you offer him less than asking? He goes, yes. I go, good. You should have. He goes, they accepted my offer like in 8 hours. I go, not surprising.
Yeah.
You probably offered him too much. Well, I told him, he's going to live in it. But the point is, there's deals everywhere. Guys, the market has changed. I'm telling you, and I'm going to show you how I'm seeing this and some of the stuff that we talked about on last week's call that I'm seeing right now. Guys, get out of the markets that you're in if you're not finding these deals. The deals are everywhere. I cannot say that again. I am actually considering, Eric and I talked about this the other day, considering going direct to seller. And I haven't been direct to seller in 15 years. I haven't spent one nickel on direct to seller marketing in 15 years. And I'm considering doing it because that's how lucrative the opportunity is right now, in my opinion. It's forget everything that's happened as early as July 1st. It is not the same. Stop thinking it is. You got to forget everything that's been happening in the last 5 years and change and put on your big boy pants and become a buyer that's controlling the hammer. Sellers controlled the hammer up to 4 weeks ago. Let me tell you something. Sellers do not control the hammer anymore. And I don't know how long this is going to last. It may last 2 months, may last 2 years. Okay. But it's not going to last forever. And because things will change and it'll shift back a lot quicker than it took to change it. So one last question here, I think. Has anyone been able to use the modeling worksheet and actually made sense of a deal? Gene, all the deals make sense. If you're having trouble making sense of it, then you have the wrong deal. There's literally deal after deal after deal. And I'm happy to do next week. We can do another deal or no deal session and break it down. We just did this 2 or 3. Elvia, when did we do the modeling, when we did the new version of the modeling, and we actually went through this, we talked about the gap funding.
I think that was like probably 3 weeks ago. It's 3 weeks.
Elvia, just find that in there, find it in the Facebook group. Let's put it back to the top again and put it in the chat for the people that are on here. Go back and watch it, guys. If you guys miss these calls, they're in the Facebook group, for at least for right now.
Yeah.
Until that changes. For right now, they're there. Go back and watch them all.
Yeah, that's why we do it live. They're all there.
Somebody just sent me, look, I just got a deal sent over. from somebody that was using a model from 3 versions ago. I mean, seriously, guys, it's all the up-to-date version is always available. Make sure you're using the updated version. If you guys come and go in the group, that's cool. But you guys got to use the right materials that give yourself the best chances to succeed and be successful. You just have to do it. Okay. If you don't, things have changed the last 3 weeks. If you've been living under a rock for the last 3 months, you missed it. Okay. Take advantage of what we're providing you, but you can't go on and get it. If you don't have the new version of the model, go and download it. There's a link on the Facebook group, or go to cashflowdealmachine.com and download it. It's that simple. But make sure you're using the most recent version. If you're not sure, just go to that link and it'll tell you right away if you're on the right version or not. So the short answer is yes, the model works, and it works great, and it gets better and better every day because we continue to fine tune it and make adjustments to it. So now I will say this, and I think we should bring this up. It's shifting, okay? It's shifting from less cash now to more cash flow and cash later. We're seeing that because we're not able to, the reason isn't the deals aren't as good because they're actually better, but we're actually being a little bit more conservative when we create the notes that we're going to sell, so we don't have to eat such a big discount. The main reason is that for the last 5 years, you couldn't hardly fall down and not make money 6 months in the future, right? So what's happening is that we don't know what values might drop in the next 3 months, right? It might drop in the next 6 weeks. So we have to be super conservative. At least I'm going to be super conservative and model it so that I don't have to discount as much. So I'm writing where we used to write a 70, 2 years ago, a year and a half ago, we were writing 78% first liens. That's what the market would allow us to bear. Now we're down to 72%. And I would like to see 70 if we can, which means if you write a 70% first, that means 30% of it comes from cash from the borrower and the down payment in the form of the down payment and the second note. The reason being is that we don't really know what the true value of that asset is, that property is, okay? We think we know what it is by looking at comps, but the true value is what the BPO says, the appraisal says, you know, something other than you or me determining what it is. So what we're starting to do now, what I'm starting to do in all my deals, as soon as my buyer goes to underwriting, because remember, the modeling is a forecasting tool. It's really designed, it was initially designed to help you make a decision very quickly to get in and out of the deal, because you didn't have, sometimes you had minutes, maybe hours to make a determination if that you were going to buy that property or not. Now you don't have to, now you got days. You can spend a little bit more time really understanding what that opportunity is. So where we had the advantage of value on our side before, now it's almost a disadvantage because we don't really, we're guessing or we're forecasting what value is. The only way we really know is by doing the appraisal. So what I'm doing is when we find that buyer that we're going to finance for, and I get them in underwriting, I automatically I get a BPO and an appraisal immediately.
Explain what not everybody knows what a BPO is.
BPO is a broker price opinion. It's a professional analysis of a property that most note buyers will take as a valuation. Okay. Yep. It's not me or you or anybody else just going in and whipping up.
It's a lot cheaper than getting a full-blown appraisal and quicker. And there's resources in order to go and get a BPO to make sure that, and it's a good, effective way to add to your file if and when you're going to sell your note.
Yeah, because if you notice in the model now, okay, we've changed in the model. If you don't have the new model, you're missing this out. This is all critical components of what we're talking about. Is that I set now the first and the second lien interest rates are the same. Okay, I didn't just decide to lower the second rate because I was a nice guy. That's not why I did it. The reason why I did it is so that when we get the buyer to underwriting, and remember, we send them over making some assumptions, I have the ability to adjust that first and second lien percentages. There are levers that go up and down. And I'll show this. We'll do this on the next call. I'm going to do it today. don't want to get to the note side of it, but it allows us to get really fine tuned how much we want that first lien to be based on what we know. Because remember, the model does two things. The model forecasts today, but it becomes an actual model at the time that we actually find a buyer. Because we don't know what we're going to actually sell it for, or how much we're going to get down, or how long it's even going to take us to find that buyer. But once we do that, we should go back into the model and update it with another model that has that reflects the actual numbers. Okay. And then once the actual numbers are in there and everything adjusts, you can go back and look and see. You might say, you know what? I don't want to write a check for $5,000. Okay, well then we got to go back and make some adjustments. So we'll spend the next office hours live call going through some of this deal stuff. So if you have any deals that you want to go over, make sure you send them over, make sure they're done the correct way. We're not even going to respond to you guys if they're not done right. You guys have been doing this long enough. The instructions are there. Make sure you have the new version, put it in there. We have too many people to help now.
Real quick, if you're new to the call, because we're bringing more new people to the group every week, as the note, the model, the updated model is in the Facebook group. It's pinned to the top. The good part about it is you can go into the group, you go into it. It has a video and it talks about step by step on how to fill it out and use the model. We can, but before the end of the call, maybe we'll pull it up so you have an idea, but it's pretty self-explanatory what you get when you go through the videos and what the model does, which the model, like Nick said, it's just, it's an estimate of what you think could happen in the future. And, for us, it's pretty conservative. We write them down we're pretty conservative when it comes to the model. So. Yep.
Yeah, that's a good point because it's a very conservative model. There's a lot of things that can go, not many things can go wrong in the modeling on the forecasting, but a lot of things can go better, right?
Yep.
So, but that's why we forecast extremely conservative in there. Okay. So, keep that in mind as well. So a couple more questions and we're going to get into some of the note stuff. So do all the preferred vendors have a specific landing page? Most do, because what we do is so different than anything else. For example, with Prime Corporate Services, use that link because they need to know you're coming through Creative Dealmaker, because guess what we do? We write notes. That's it.
And then when you're talking to them about writing notes, there's some tax questions and things that come up that majority, since they know our model, there's some things that for tax purposes, and with installment sales and stuff like that you want to know.
Yeah.
You use it in your favor when you're purchasing properties.
Same with Constant Close, right? They have all of our documentation, our note creation package and we're going to go through that here in a second on what needs to be done. Whether you do it yourself or you have somebody else do it, it doesn't change the fact that it all needs to be done. So, it says, then Susan said, does Constant Close make the purchase agreement for a potential buyer? Absolutely, they can. They surely can. They have all the.
I think if they're going to go write the offers for you and the terms that you think you want, they've written so many that they might change a few items. So that's a great question, Susan. They've written so many offers and been involved with so many transactions that they have different templates and different terms that they might recommend. I think they might charge for that, but I'm not exactly.
It might be integrated. You just have to ask them. I mean, that's the whole
point. But yes, if you are going to go that direction, I mean, one little term, one little change in anything in the purchase agreement that you write could be huge in the financial.
And that's why they have all of our verbiage and all of our documents and all of our templates to go recreate, because I don't know Florida, right? I don't write deals in Florida personally. So you have to take the stuff that we've written with the right inclusions that need to be put in there, and they have to be tweaked and modified specifically on a state by state basis. But that's what they get paid to do.
Excuse me, my question was related to on the when you're selling. Stacy could not be on this call, she's tied up, but it is on the selling of the property to the new owner.
Okay, such as what? What would be different in, so give me, like, tell me, explain to me what would be different
Okay.
from,
Oh. We have a few buyers that are interested and could afford the place,
Okay.
okay, with a good down payment. When do we contact Constant Close is
I
my
would have already
question.
contacted them. I'd go
I'm
in that
sorry?
link and I would have already contacted them. If you're, look, here's the thing you gotta
You
remember.
already
Okay.
own the asset.
You already
know
have
you're
it,
gonna
right?
sell it.
You're
Yeah.
going to sell it.
Yeah.
Okay, unless you think
Correct.
you're going back and forth between, do I want to do this transaction management myself or do I not? Then just get them involved, okay? If the buyer
No.
changes, it doesn't change the back end process, okay? Yeah, don't wait because they're the experts, right? Get them
Got it.
involved or whoever the transaction team's going to be for you, get them involved immediately because you guys don't know. I mean, if you're asking a question like this, which is a good question, that tells me right away that you need to get the transaction coordinating team involved as soon as possible so you don't say something wrong, do something you shouldn't be doing, and making the mistake, because these mistakes can be extremely
You
costly.
have 3 offers or 4 offers, and you go with a transaction. Let's go with Constant Close. They're going to probably give you a few questions to ask them. Actually, maybe pick the right buyer.
But but here's the thing about these guys, okay? They will manage everything. You don't even have to talk to the buyer ever again if you don't want to. They will do all of that. 100%.
Awesome.
That
Awesome.
100%.
That's what we want.
That's
Yes.
what I've been saying. You just got to
Yes.
get them engaged so you can let them do their job so you can go figure out how to get another deal. That's it.
Perfect.
Okay.
Once you're contracted and they've accepted the offer, then you pass it off to them, and then their job.
Guys, remember what we talked about. There's 4 things that you have to do. Number 1, you have to find the deal. Number 2, you got to analyze the deal. Number 3, you got to figure out how to fund the deal. And number 4, you got to figure out how you got to find the buyer. So if you've done all 4 of those things, you don't need to do
Yes.
anything else.
Perfect.
Submit it. Okay. So if it doesn't fit, if you come up with a question or you need something else that isn't one of those 4 things, you're getting in the way of getting the deal done. Okay. That's it. They're not going to help you find the deal. They're not going to help you analyze the deal. They're not going to help you fund it. They're not going to necessarily help you find the buyer. Those are your responsibilities. Once you do that, you're done. You get the contract and you take that contract and all the documentation, questionnaire, whatever it is, and you submit it and you wait for them to come back and tell you what other documents they need from you. But other than that, you're just sitting there waiting to close and get through the process. Okay. Don't make it. This is not a difficult process. Everybody wants to make it hard because that's how they have been taught and trained. And that's what they're accustomed to doing. You guys got to just remember, do those 4 things. And there's nothing else that you have to do unless you choose to do it. Okay. That answer that?
Okay.
You good?
I have a second and a third question there.
Sure.
When you have time.
Yeah,
Go
no,
ahead.
go ahead. Yeah,
Go
let's
ahead.
do it.
Okay, my second question was, at what point do you charge the non-refundable deposit? And if they are not approved, do they get the money back? Or does it come off of the purchase price at settlement, or is it just an additional non-refundable deposit?
So me personally, okay, if they don't qualify, I always give them their money back.
Yeah.
Right,
The only reason I would not give them their money back is if they decide they don't want the property any longer. And if I find another buyer, I probably still give it back to them. I don't want
Got it.
anybody's money that I'm not selling a property to. I'm just not like
I
that.
agree.
That's just
Yes.
me. Okay. Doesn't mean you have to, doesn't mean you're required by law to do so. It's just how I do my business. Okay. So, but I do want them to give me, I don't ever do, what I don't do is move forward until they sign the contract and give me the deposit, period. Okay. That's their skin in the game to move forward and proceed.
I
okay?
mean, we have the right to that money, the way it's written in the contract, but I mean, if someone comes along and then, and they're going through underwriting and something pops up, I mean, we're gonna go sell that property to somebody that wants the house, you know what I mean? But there is, I mean, you're contractually, I mean, you gotta look at, there is some common sense involved. And if someone's just taking advantage of you, then, you know, and they wasted your time, that's one thing. But if you, Nick and I have the same mindset, we don't want their earnest money. We want them to buy the property and be qualified and have a place for their family to live. That's what we want.
Yeah. So
Perfect.
was this other question, Susan, you have, was if you want to borrow the money for
course.
the closing?
Oh,
What's that?
right, but no, I don't want to borrow it. If someone in the group wants to borrow money, and yes, I know, I understand that that's transactional funding. I have no problem with that. What I'm saying is, under normal circumstances, usually it's paid back differently with transactional funding. So I'm not talking about that. I'm talking about if we can help somebody in the group, how would you suggest? Because I know how I would suggest, but I'd like to hear your, unless you want to hear my
Is it your
suggestion
money?
first.
Is it
I'll
your
give
money
to
that
you.
you're lending? Are you saying if you lend money to gap fund somebody else in the group? Is that what you're asking me?
Yes.
So what's your-
Stacy's money.
Yeah, what's your opinion on that? And then we'll give you ours.
Well, I'll tell you exactly what my opinion is. It's whatever you think is fair and equitable to do the deal. It's your money.
Yeah.
You control the hammer. I mean,
Okay, well.
if it was me, here's how I would do it if I was lending money. I would have to, and it's a little bit of a challenge because there's the chicken or the egg in a little ways, right? You can't do certain things in the process that don't exist, but you have to create other documentation to make it work. But at the end of the day, I'm taking that second lien position and I'm holding that second lien position until I get paid in full. And then it's going back.
Yeah.
I agree totally, and that was my suggestion to
Yes.
Stacy.
That's your security. So if
I'm
someone.
not doing an unsecured promissory note, for example,
No.
that's in that
No.
thing.
So
So I'll
let's
do
say
a
you-
transfer of collateral and a launch.
Yeah.
Okay, and I'm almost, here's the trick of this, okay? Is that we have to be a hard money lender to a certain extent and lend in the
Correct.
second lien position
Yes,
on the lending side, okay, to get the lien on it, okay? But then what we're gonna do is that we're gonna take when the second lien is created, and that's what we're gonna lend against, then we're also gonna take that back in the form of a collateral assignment and transfer of collateral and the launch and all that stuff. And then, only then am I going to release that second lien once it's paid in full. And then they get the second, then they'll get the second lien back.
So we talked about on another call. So let's say you create a $40,000 second lien, but you're 20,000 out of pocket or 10,000 out of pocket. There's that
Correct.
gap that you're talking about, which is it's a huge opportunity actually for people to, and let's just say that second lien's paying you $400 a month. Okay. Well, how fast would it take to pay back the 10,000 or the 15,000 or that gap funding at a reasonable interest rate? And reasonable could be 5 to 20%. I mean, the math still works because you have 400 a month coming in.
What I'm recommending doing is I'm not arbitraging the cash flow, right?
Yeah.
100% of the cash flow goes back to pay down the debt.
Yes.
Only way I'm doing it. Okay. So, and you can just calculate.
Correct.
Now the
I
advantage of
think
this
for
is,
the group, because
go ahead.
as long as they are doing it the Nick and Eric way, we would like to help some of the people in the group who may not be at a level of financial freedom yet that they are. And
Yep.
rather than getting an exuberant amount of interest or whatever, I think that this would be the fairest way to do it.
Sure.
That's awesome. I think that's
because
great. I mean, a lot of
buying
people can benefit from that. So you need to sort of figure out what your rate and term sheet looks like. But what we'll do is that those things will get all put in to the transaction coordinating process, right?
Yep.
So
Correct.
if
So
it's
you're
in,
so you're protected when your money leaves your account.
so for example, if it's constant, so we have two transaction management companies. There's USA Home Partners, which does Texas, Arizona, Tennessee right now. More will be added, but those are the only 3 states. Constant Close does everything else. So regardless of which way it goes in, this is instructions that have to be done as part of the package that gets done at the closing, the whole 9 yards, to get it done. And all that stuff gets created and it's all done. It's all done at closing. We're not chasing documents. It's done at the servicing level. It's a little bit of, there's paperwork involved, man, because you got to protect, everybody that's in the deal. So you got to make sure that you don't, miss something. But once we get that piece of it done, we'll build it out and it'll be fine. So we're going to have to figure out, you're probably going to need to use some of that. Not always. We might be able to not have to fund that deal with the gap funding initially until the note sale. And then when you can take it from the note sale, it's going to depend. But once we get to that one, we'll take a look at it. We'll make sure all the paperwork's in place, and that'll become the protocol that gets used on anything that gets gap funded. Okay?
I think there's Susan, what you're saying is obviously you think there's an opportunity to handle the gap. And I think it's there's a great opportunity because obviously the borrowers that we're underwriting are really qualified people. But maybe you didn't buy the property right, or maybe you want a bigger second lien so you can sell the first lien. And there's a little bit of difference there. But gosh, 2-3 years down the road, all of a sudden that initial gap funding is paid off. You made a nice return on your investment, and then all of a sudden all that cash flow is yours and you have no cost in the deal. So yes, it's a great opportunity.
Yeah.
To
And
provide.
when we go, we'll do this on the next call next week. We'll break this down.
Okay.
Because we're going to do some deal or no deal, go through the new model again.
Yep.
And then there's going to be opportunity where the model will show exactly what you're talking about, where it's going to show, hey, it's a negative $10,000 on the cash line, but it's a $48,000 second lien, and show exactly what that looks like and means. But there are a couple of triggers that still need to be met, because it doesn't mean that every deal is still a deal, right? We don't want to go like I would think. So here's a question for Susan. When in that gap funding scenario, what's the term range that you're looking for on these deals from you as a lender? What's the minimum? What's the maximum? And you might not know exactly top of your head, but I know it's not a day and I know it's not 50 years.
Right. It depends on the amount. And also, would you suggest that we have the second lien put in our name with a proviso that once the gap amount is reached and is paid off, then it would be transferred to the person who we lent the money to, so that it is fair?
So that's my first opinion of that is no, and here's the reason why. Because I don't want to be considered the lender on the transaction, right? I don't want to be the lender because it's not my deal. I'm not seller financing. I'm not the one seller financing the deal. So my preference would be whoever the note creator is to be the lender. Okay. And then I come in and fill that in some other capacity. In this situation, I don't really know. I just have to look at it and see. But I would rather, since I know that the original documents are being controlled at the title company, that whoever's creating that note isn't going to ever see it anyway. They're never going to get the originals because the instructions are going to be very clearly defined, because they're automatically going to do the transfer of collateral and the purchase sales agreement and the lodges at the time they're doing the documents. So they're automatically going to go to you regardless. Okay. And then they'll transfer back when the lien is released. So, because you got two transactions, we'll have to just look at it, and I'll just have to see. And I don't know on each date, there could be some different guidelines and rules. We'll just have to look at it when we get to that point. But I do not, what I don't want to be is I don't want to be the lender to the owner occupant buyer unless I'm the owner.
Correct. Okay, gotcha. And the
Now,
other
there's a
thing I
way
was
around it.
thinking-
You could deed it. You could get deeded onto the property and have both on the property. You could do that. I have to think through that. and
That's
see if it's
messy.
something I would really want to do it, but you got to protect your investment. That's the bottom line. So,
Okay, and the other thing I was thinking of is instead of buying somebody out of the second note, which they would only get 50% of, if somebody needed some extra money so that they didn't have to do this all the time, we could buy a partial on it.
Yep.
And so if it's just 10,000, maybe they would get 30,000 for the next whatever many months. And then
Okay.
they would still have a portion at the end. And I
Sure.
thought, I mean, I've been doing this for over 40 years. And so I just thought I would offer that to the group, but I don't want
Nice.
my number out there to everybody.
no, and look, we can vet and put it in there and we can put it inside and look at it and see. And, but I would say this, if you can, you guys can go through and you and Stacy can figure out, what that looks like, what you're comfortable with from percentages, rates, terms, collateral, ratios, investment to value, all the things that are important to you as the lender, because what's important to me and everybody else could be two different things, right? Does it things such, just spend a little time. Do certain markets make a difference to you? Do the values of assets make a difference to you? Do you care if it's judicial or non-judicial? I mean, these are all the
Yes.
questions that I would be asking myself, because what we want to do is build that avatar. So we're not having a bunch of stuff submitted looking for gap funding, but it never, you want the system to pre-qualify it. Okay. So just
Absolutely.
Stacy, figure out what you're interested in on that. And then we can go from there. Okay.
Thank you very much, both of you. And
All right.
I will mute myself now.
All right. Thank you. All right. So,
Thanks, Susan.
so that probably opened up a few more questions. Eric, any more questions in the chat? Then I want to show some of the note stuff here.
No, let's go through the note stuff and then.
All right, let me see if I can-
The thing, what Susan's seeing as she's been involved and her and Stacy have been involved with Creative Dealmaker now for quite a while. They're seeing opportunities in the group because of the cash now, cash flow, cash later. When you create a note, you buy a house, you create, you sell it, create a note, keep it and cash flow it. But there's going to be a time where there are really good opportunities. But there's a little bit of there's a negative side. There's maybe no net cash. And so if you can find people that have a little bit of liquidity that want to be a part of the gap, I mean, that's what I think Susan's seeing there. So that's 100% smart because the market's changing. So what do? We change with the market. So anyway, yeah.
All right. So, hey, LV, can you send me that over again, the PDF? Because I think I lost it in the chat. I don't know where it is now.
Okay.
Just send it to me in the chat and I'll open it up. Let's see here. Any questions on that? The gap funding is going to be able to produce so many more deals. I just got about $2 million in gap funding in about an 8-minute conversation because it's that easy to get because it's such a good deal for the investor, the lender, the private money guy, because they're still in a lean position. It's still a good deal. And it gets some opportunity to lend because guys, you got to remember, it's going to be extremely difficult for lenders that are typically that are accustomed to being lenders to lend moving forward. It's got because the deals just aren't out there. I wanted the PDF, Elvia. Hang on, I'll just see if I can open it in here.
I'm just.
I got it.
So real quick, while you're doing that, so I just pulled up $40,000 second lien, which is a very pretty standard second lien nowadays. 10% interest, 30-year terms, $351 a month. Okay, so but maybe you're $15,000 out of pocket. So maybe someone wants a 10, let's just go, let's be aggressive. Say 12% return tied to that note, right? So you could have that paid off. I'm being conservative in about 3.5 to 4, about let's see, about 4.5 years. Okay. So now all of a sudden you're building your business. You're not coming out of pocket a ton of money. You leverage, you basically borrow against your second lien that you created. You pay someone a fair return. You pay them off in a shorter period of time. Okay. And then in a few years, all that money starts coming into you. So what you're doing is you're building up this pool of cash flow that if you don't have the money, if you don't have the net cash, you're going to be able to borrow it against that second lien, against that borrower that put down payment money, against knowing there's a first and second in place from a quality borrower. And then all of a sudden, a few years down the road, all of a sudden that's all paid off. And now you have, it's basically having a free and clear house paying you $350 a month for the rest of the term. And as you guys know, for fun, as the amortization table works, in 4 years, let me just do this real quick, just so you guys know, we do this a lot, but I like doing it. If you go down 4 years on that, I mean, the borrower still owes you $40,000, almost over $39,000. So now you just paid off your gap funder. They made a great return. They're happy. And then now you're still owed almost the full balance because of the amortization schedule. That's why
we'll
Nick
spend
and I
some
do
time
this.
next week. This
Yep.
is much more easy to consume and understand visually. I'm extremely a visual person, and it's super hard to follow and understand really what happens in the model. But I will tell you this, is that you can crush it by having availability to have gap funding, because all you're doing is you have to wait a little bit to get the benefit of the benefit of your work, right? Either that or you get to use your own money. So let's go to the let's go. I'm going to share my screen here real quick. Okay. So this is can you see this screen here?
Yes, sir.
All right. So we've got here, this is just a note buying checklist. We get a lot of people that send us notes. They ask, hey, do you buy notes? Anybody buying notes? This, that, or the other. This is the note buying checklist. Okay. This is in the resource center. You need to buy a note. You need to follow
Or
this
you need to sell a
instructions.
note, buy a note or sell a note.
If you're, no, this is us being the note buying.
Yeah, I know.
This is the creative deal maker note buying checklist. So if you have a note to sell, this is everything that we need to buy. Okay.
Yep.
This is where the buyers. Okay. You guys, if you don't have this stuff, you got to fill this out and you got to complete it. It's that simple. Do not do it any other way.
And here's the thing, you already need it anyway. If you have a transaction coordinator, they're creating all this anyway. We all put it in a live drive. So you literally, when it's done, you share the link to the note buyer, if it's us, and we just whip through it. It's pretty simple. It's just setting it up on the front end. It looks intimidating, but it really isn't. It's a traditional.
I would hope, and this is probably wrong. I already know the answer to this, unfortunately. Most people that write notes have not done anywhere nearly the amount of work that it takes for us to buy a note.
And to get top dollar for it. So there's some,
that's a whole other story. Yeah.
There's some new people on the call that are in the note buying business, they haven't created notes from scratch. And so they'll appreciate and understand the reason why. And we talk about the F-150 story, but I mean, not having all the documentation and serviced properly is going to get you a pretty big discount. I mean, I'm looking at one right now. The poor guy, I mean, he might be on the call or not, but the interest rates are so low that, I mean, he'll be lucky to get 50% of that note, and it's a good note, and the loan to value is great, but the interest rate's so low that, I mean, we're buying a yield here, and security.
Well, you're buying both. You're buying investment to value, but once you get to a certain investment to value, it doesn't matter anymore, right?
Yeah.
That's why we write it 72 to 75% or below. But it's not linear, meaning if I don't get 104% of value by writing a 32% investment to value first lien. You know, it doesn't go that way.
At 5%.
There's a point of diminishing
5%,
returns,
right?
point of diminishing returns, and that's why we set it at that 72 number now to get the maximum return on value, because there's enough spread at that ratio to protect the investor that's buying the note in the event of a default or something happening, right? It may go down, it might go down a little more, it might go back up. I don't know. It's a very fluid thing. So if you guys have notes and you want to sell them, this is what you do, okay? Anybody has a note they want to sell, this is what you have to do. You have to send all these documents over, as many as you have, needs to be put in a Google Drive folder with full access and a view only. And you need to send it to admin at USA Home Partners. And then we'll take a look at it in a couple, 2 to 3 business days. We'll give you an indicative bid on that note if we're interested in buying it. And that's it. So, but we're not going to come back and ask for any more documents. If you don't put them in there, you're going to get your bid based on what we see. And you're going to, when you go, oh my God, you're offering me $62,000 on $100,000 notes. You must be smoking something. I'm going to say, well, you obviously didn't do a good job of underwriting the borrower and stacking the collateral file, because this is what we need to have. So, any questions on this? This is actually in the resource center. Okay. So this is for people that have already created the notes. Now, the good news is if you're going to write a note, you don't have to mess with any of this. It's already done for you. That's the point of the transaction coordinator. They're going to do all this, because let me show you something here. Let me see if I got that. I'm going to try to pull up a file here. Give me 1 second to stop sharing here. You stop sharing. Let me see if I can find. Oh, you know what? Can't do it on this computer, I don't think. On a different computer. I don't think I can. Let me see if I can do a screen share and pull this up. I'm going to show you the difference. Let me see if I might have this here. Line checklist. Shoot. I'm just looking to see if I can find no blind checklist. No blind checklist is not it. I was trying to find this other version of it. Okay, I don't have it. I don't have the PowerPoint on here. Let me see if I can just share. Let me see if we can do a screenshot and just let me see if I can get creative here. I want a different computer, because the note buying process, I mean the note creating process is really already done for you. Okay, so you already have, all you have to do is those 4 things. This is what we were talking about just a few minutes ago. You only have to do those 4 things. File recent. Trying to find this other screenshot just so you can get an idea on what it looks like. I don't have Elvia, do we have the link for the when we did the master class? There was a link that we had for all of the redacted files.
Oh, I remember it. I don't.
I was just going to go through it and show it. I might be able to find it. Let me do this. You know what? Let me send these. I'm going to send this over real quick. Eric, I'm going to send this to you real quick, and then let's pull this up, and you can share it, and then I'll try to find this other one here. So I'm going to see. I'm going to have to send it to you in a message. Let's see here. See if I can do this.
Are you just going to send it to me in the chat?
Yeah, because I got on a different. I'm doing the Zoom. No, I can't do it in the chat. I gotta actually text it to you in Messenger, and you can pull it up. I just want to. Here it is. See if you can share that.
Let's see. Didn't come through to me yet. Sometimes pictures.
I think you
don't
have
come-
your thing set up different.
Yeah.
I think it's part of the problem, because that didn't come through.
Not yet. No.
Okay. You know what? I think I can actually message myself with it. I can open it there too.
Sometimes it takes a second, but no, I did. Sometimes I get attachments from you and sometimes I don't.
Yeah, I think that's how you have it set up in your,
in my,
between your Mac and your thing. I just sent it to myself. I think
yeah.
I should be able to hold this up. Give me a second. Share the screen. All right, I just sent it to myself. Back up to the top here. There we go. Okay, let me open this up. Okay, let's see if I can share my screen now. All right, share screen. Perfect. All right, so let me show. This is why we do what we do. Okay, so I'm going to share this here. Can you see this now?
Yep.
All right. So basically, oh, my highlights didn't come in, but that's okay. I'll just show here. So this is a summary of why we do what we do. Okay. So what this says is this is from a nationwide note data collection company, and it tells us the breakdown of these different categories. So 74% of all assets sold on their platform were performing, okay, versus not performing. That's why we want to write these things at the beginning, so that we want to have something of value. Another one I thought was extremely interesting here. A lot of people go, well, we see stuff come in where they wrote them as a contract for deed. Don't write contract for deeds. We talk about this. I don't care what why you think contract for deeds are better to write than mortgages or deeds of trust. It doesn't matter if you're going to sell it. I'm telling you right now, you will get crushed.
Hey,
Don't believe me, try to sell a contract for deed.
And real quick, so when people ask me about contract for deeds, because I own contract for deeds, I've bought contract for deeds and I've created them. And as of now, well, the way we write our notes now is we're getting such a quality borrower that the equity position they have, that's why, and first of all, banks don't do that. So we are doing the same thing that a bank would. If that borrower is qualified and they put enough money down, most people do contract for deeds, so they have the ability to set up a forfeiture quicker and take the property back. We're not lending to own. We're lending to collect cash flow for a long period of time. There's two different mindsets. That's why people do lease options. That's why they take less money down. They do all that stuff, so they're able to get the property back without going through a traditional foreclosure. But we're getting enough money down on these deals where if we have to foreclose, we foreclose, but there's so much equity in these properties now that our borrowers are good, solid payers. So that's the short answer of contract for deed versus not. We just don't. We do everything that a bank would, because
a bank's not. When's the last time you've seen a bank write a contract for deed?
Yeah, they don't.
They don't.
Yeah.
Why don't they write a contract for deed?
Because they're not property owners. They don't own real estate. They
It
control.
doesn't matter, because they don't have to, because the asset still records the asset is still the collateral for the lien that they have on the property and the note that they have.
Right.
That's it. So
Right.
why does that change anything? It doesn't.
Yeah.
So, all right. So anyway, let's go through a couple more of these on here. This one right here, this is why we write first position notes. 84% of all the notes sold were first position. Okay. It's what we write. That's what we're writing. We've got, most of them are single assets. Okay. Another big factor as well. That's all the stuff that we gain when we do this.
Well, no, you also have here escrow versus direct to seller payment. All our stuff is set up through servicer. All of it. It's all taxes, insurance. So it's
Yes.
principal, interest, taxes, insurance, and servicing fee, PITIS. And when you have PITIS, it depends on the size of the loan, but that servicing fee adds up. And when the borrower's paying it, you have about the most predictable stream of income than you can get.
So anyway, this is why we do what we do. This what gives us a maximum of value. What you don't see on here is that the 82 or 84% of the market of the value that we sell for. We outperform traditional note buyers as a note buyer than the national average by anywhere between 8 and 10%, which is a significant number.
So I have a question, and then John has a question on some timing, so I'll bring him up in a second. But
Okay.
I had Brian here in the chat ask about the digital product, and do we help people do when you purchase the digital product? Do we help people do their first deal? The answer is we don't, but the digital product tells you pretty much everything you need to know, and these calls and where the market's going is doing the same thing. But where we come in is if you have, go back to the top here, what do you need? You got to find the property, you got to fund the property, right? You do those 4 things, and then once you have the house and a buyer, and you're interested in selling that first lien, 100% reach out to us, and we will see if we have interest in purchasing the lien. If it's created the way Nick and I teach it in the program, that's one of the things that it's really we're really kind of pushing is go get the dang digital product, learn the basics of this stuff. It's so cheap based off what the value you get. And then from there, once you've done that, then you're going to have all the systems and processes to get the best bang, the best value for that first lien.
Yeah.
Because when it's all said and done, if you can have the first lien paid off and you have a free and clear second lien and a little bit of money in the bank and rinse and repeat over and over and over again, you don't owe anyone any money. They owe you the money. So
Yeah.
I hope that answers.
Well, I think what's really important to that is that the first, finding the deal and funding the deal, that's on you guys. That's not, Eric and I aren't going to tell you or show you how to go find it. We'll give you some ideas, but we're not going to train you on how to go find deals. I mean, deals are everywhere. I'm going to show you a screen here in just a minute. Two things first thing I want to show is I want to share. This is what the collateral file looks like. Okay. I couldn't even get it all on here. Okay. And there's each of these is things. This is on the buy side of the transaction. People go, why do you need to buy documents when you go sell the note? Well, you don't, but I'm telling you, there's questions that are going to come up. Hey, I need to see the original owner title policy. Okay. I want to see something else, by giving it in the beginning, there's nothing, why you wouldn't disclose it. Who gives
You want to
cares
make
what
it as
it's
easy as possible to get the note buyer comfortable with the deal that you created, because you created the note from scratch. So they'll give you the top dollar. So if you have clean, easy files and they're created the same every time, that's why Nick and I created this, is because our notes are the same. They don't change. Everything's the same. So our note buyers know when they buy our stuff, or we partner with them, or if we for our other fund, they're the same. They don't change. That's the best part about this. And if you're a note buyer on the call, you've underwritten notes and everything's different. It changes, different escrow, different terms, different contracts. All the stuff is not always black and white. And that's what we try to create for our
And
notes.
all this stuff that's in here is all done by the transaction coordinator. Okay. All of it's managed. Okay. They handle the title company. They deal with the selling agent. They make sure the purchase sale agreement is in place. They get a copy of the title commitment. They ask for the seller's disclosure. They make sure the RMLO is ordered and recorded. Guys, the RMLO package is super important. There's 30 disclosures in there. Okay. I can promise you, if you didn't use an RMLO to underwrite your borrower when you're trying to sell a note and you don't have the disclosures in there, you're looking at least a 10-point deduction. At least. You wasted, if 100,000 now, it's going to cost you 10 grand on something you could have spent $500 on. It's ridiculous, but people don't know what they don't know, because you know why? Because they think because it's their only deal that they're going to write, because Dodd-Frank says, oh, if you only write one, you don't have to be follow Dodd-Frank. Well, that's true, but doesn't mean you're going to get maximum value for your note.
Well, you always want to write everything for an exit for maximum value.
I get that, but that's not what they're told
I know.
to do, and what they're required to do, and what they should be told are 3 different things. You're not most people hear that I don't need to do Dodd-Frank or underwrite the bar because I'm only selling. I get 3 for free, right? 5 for free, depending on how you interpret the rule, right? But you always get, no matter what rule you interpret, you get 1 for free for sure. Okay. Anybody can go write, they can write it on a napkin on the top of a pickup truck and get paid in $100 bills. And there is nothing that prevents you from doing that. Okay. However, if you do that and you try to go sell that note, you're going to get hammered. Okay. Don't do it. So I'm saying, don't do it. All right. So, these are the things in here, but remember, this all goes back to what happens at the transaction management level. The transaction coordinator makes sure all these documents are done correctly. They're all in the file, and they're all, they're all put to where they're supposed to be, so that when you come over here, this third thing, and you're going to go sell the note, that these are the 4 other items that happen on the note sale. Remember, it's a third closing. These are the new documents, but all of this has to go in there as well. Okay. All of it goes. It's what the note buyer looks at to evaluate the risk and the price they're going to offer you on the note. Okay. So, that's it for that. So I want to show, somebody asked earlier, how do I find deals? Eric, while I'm pulling that up, see if there's any other questions or anything we need to address, and we're going to jump into.
Yeah, I wanted to, John's got a question on some, you want to bring him on real quick, and then we'll go through
Sure,
that.
whatever.
Okay. Here, I'll bring John on. You need to unmute, and then you there?
Yep. Can you hear me?
There he is. Yep. All right, I'm gonna spotlight you.
Cool.
There
Hey,
you
guys,
are.
how are
What's
you?
up, John?
How are you?
I'm good. Good.
Cool.
what-
So,
How can we help you?
so you had, you remember the podcast that you had done with Jeff Rappaport?
Yep. I haven't
was on
I haven't heard it, but maybe. Yeah. What's going on?
on? Some of it had to do with that, and some of
Okay.
it had to do with our last hours session, the last one we did. So there is some timing with insurance. There is some timing, getting rid of the old and putting in the new, and some gaps. There's some gaps in financing and when certain things get done. I just wanted to know if you could talk a little bit about some of the detail around any kind of timing issues with regards to the 2-note solution that you can think of, anything.
So I'm going to say this, Eric, then you can jump in.
Okay.
4 things you need to do: find the deal, analyze the deal, figure out how to fund the deal, find the buyer. So which of those 4 things does that fall under, would you say?
I'm just, what I'm really asking
I understand
about
what you're
is-
asking, but I
the
got
things that-
guys.
Okay.
Don't confuse the process. Okay. If you want to learn and go do all that stuff, this is not the place for that, because it's too complex. Okay. You're starting to talk about legal stuff. I'm not going to give anybody legal advice, financial advice, any kind of advice or recommendation. I'm going to tell you the same thing that I do. It goes to the transaction coordinator. They handle all that because they have the direct relationships with the title companies, with the servicers, with the underwriters, with the attorneys. That's their job, period. Guys, I'm extremely bullish on this. I'm not even going to answer those kind of questions because you shouldn't be messing around with them anyway. That's a question to ask your attorney. If you want to know my opinion, ask your title company, ask your escrow agent, ask somebody else, not Nick and Eric, because that's exactly what I'm going to go do, even if I know the answer, because they're the responsible parties for all of that stuff. That's why
And
you
it makes
pay them
it,
the money.
and it makes it so much scalable, right, John? Like if you're involved in those little tedious things, that's where you get out of going out and finding more deals and disposing of the properties. So I know the question you're asking, but there's a lot of unknowns in that without letting them do their job.
So much, it depends. There's 50 things that I would have to ask the question for before I could even give you my personal opinion on what that is. I mean, that's sort of what our advanced coaching and stuff does. That's what those kind of questions would be addressed and answered. But I can't do it in this environment for basically because you guys would, it just doesn't work that way. It's just way more complicated than that. That's why we don't even mess around with trying to really show you guys how to manage this process, because even when we tell you and we show you, I cannot tell you the mistakes that get made every single time. Am I right, Eric?
Oh, yeah. Yeah, no, it just slows down the process. And then it gets intimidating and frustrating, and then you don't do the deals anymore. That's the point of it.
Yeah, that's just, we're trying to keep you from making some catastrophic mistake. You know, they can't do it. You guys have to invest in the process. If you understand the process and conceptually you agree with it, then you need to do the 4 things: find the deal, analyze the deal, fund the deal, find the buyer. Do not try to do anything other than that. I don't even do it, and I've done this 1,000 times. Eric doesn't even do it. He's done just as many times. It's not worth it. I just on a call the other day ago, the amount of time you're going to save by using a transaction coordinator is going to save you 2 to 3 times the money by doing it. If you make a mistake, it'll save you 10 times, if not more, by just not making a mistake. That's all we're doing, is trying to get you guys to be educated enough and let the professionals do what they do best. So, John, I didn't want to, it's really, really important that we understand that, guys, because there's just no reason to do it. I mean, you're going to ask me a question about taxes. I'm going to say, I don't know what your CPA have to say. You're going to ask me a question about entity formation. I'm going to say, I don't know. What does your entity structure specialist have to say? Or your attorney or your priest or whatever it is. Okay. We're going to tell you how we do deals, and that's it. And this is how we do it. And if that was my deal, I'd say transaction coordinator, figure it out. And the answer to that is go to the title company, go to the attorney, go to the servicer, go to the underwriter, or whoever else is involved in the transaction that's either licensed or authorized to answer those questions on the behalf of you, the seller and or the lender. Okay. All right. Let's, I'm going to show you my screen here. Okay. People saying, how do I find deals? Let me see if you can see this. Can you see my screen here?
Yep.
All right. So let's just look at this real quick. So this is, so I have over 50 emails that have come in since 3:09 this morning. So not even 12 hours, 50 emails that have come in and I get almost all of these should be properties. Okay. Every one of these is a property for sale. Everyone. Let's just look at these for a second. Okay. Let's just see how many of them. Okay. Here's one with the price drop. Okay. There's one price drop. See how many we got. Usually I see about 10% of price drops. These could all prices. Let's see. These are all probably brand new. Another price drop. These are all probably first time around, but every single one of these could be a potential deal. I don't know. I'm not going to look at them all right now, but let's just see if one of these works. Let's see what this one is. Let's see what this one looks like. $100,000 house. Hey, not too bad. Thought it was gonna be a lot worse than this for 100 grand. This probably was a $125,000 house 2 months ago. My guess. Small, it's only 600 square feet, but for that price point, somebody's going to be able to buy and rent this. See what these pictures look like. But it could be a 3-bedroom, 2-bath, just the same. But guys, I just go back to this wholesaler, and when I can't sell it, tell them, let me go find a buyer first, and then back into the deal. And if I find the buyer first,
that's what we're telling the wholesalers now is, hey, when this cash, when the cash offer when it falls through, we'll come back and jump in the deal. And
hey, anybody that is a wholesaler, if you're on this call and you're a wholesaler, raise your hand. I want to ask you a couple questions. You got to be a wholesaler though. I mean, you actually spend money on marketing. You go out and actually find deals. We don't probably have a lot of them on here because if they were, they wouldn't be wholesaling.
Hey, I'm a wholesaler.
All right, hey, Eric, I can't see that. Let's unmute him and let's bring him on and see who we got.
It's me.
Who is it?
Stop sharing your screen and then I'll
hang on. That's probably why I can't tell. Give me 1 second.
Yeah.
Let's see here. Stop share. Cool.
There we are. All right.
Right,
You can raise your hand or tell me who you
Yeah,
are.
raise your hand because we got a lot of people who can't see it. So raise your hand so you go to the front.
It's me, Peter.
Oh, Peter, there's Peter. Okay, there he is.
Yeah, hey guys, Baltimore, Washington, DC corridor, big
Okay.
wholesaler, do some fix and flips, just caught wind of you guys, been listening for the last hour, very intrigued. Yeah, I've looked into the
Nice.
I've done the whole lease option stuff, gone down that road, haven't done that many. To me, it's just kind of complicated. I would love to be able to pass off deals or, just kind of work with some guys who can take these to the finish line.
So
But
are you a wholesaler right now? Are you wholesaling? Is that
pretty
your,
much, yeah, wholesaling in numerous markets. Primary market is the DMV, also in Kansas City.
all right, cool. So let me ask you a question.
Yep.
And you might not have enough information now. 6 months ago, when the market was still hot,
Yep.
what percentage of the properties you were getting under contract were you getting that you were actually closing on? Where you actually were able to find the buyer and close on and get paid?
Yeah, I mean, yeah, I look at these stats all the time. About a 10, we're closing about 8 to 9 of them.
So you're about 80%,
About
80%.
80%,
close rate.
80% go by the wayside. Can't find a cash investor. My other alternative, guys, is
Oh, so it's the opposite, excuse me. So you're saying if you get 10 properties under contract, you can only find buyers for 2?
no, out of about 7 to 8.
So out of 10 under contract, you buying buyers for 8,
About
7, 8, and you got to give the other 3 back. To
yeah,
the
yeah,
seller,
yeah,
correct?
2 to 3 back, or or we eat it. Yep, absolutely.
Right. So in the last 30 days, has that number changed at all?
No,
Not yet. Okay.
no, it hasn't stayed. I know you say 6. Everyone keeps saying 6 months ago was so much different. Not in these markets. Not in DMV. I mean,
Oh, it is. Well, I'm telling you.
Well,
it is.
again, and you guys know, real estate's local. Maybe where you guys are,
Yes.
it has changed dramatically. But in the DMV, Washington, Baltimore, DC, Northern Virginia, absolutely not. They're still bidding.
So you got hedge funds still buying all your stuff. You've got
Well,
over asking on
I don't-
everything.
No, I don't have hedge funds. I don't really interact with them. I deal with, serious cash buyers. And we look, at the end of the day, we know it's a crap sandwich if we can't move it. It's a crap sandwich because we overpaid for it.
Right. So you're getting like you're getting full ask on all your stuff still right now on the stuff you're doing for the most part.
For the most part, the last deal we just did, we actually closed it today. It took me 2 months to find a buyer. Thank goodness we had 2 months from the seller, but it did, and it was in Annapolis, which is the capital of Maryland.
Sure.
Very great location. So we had a challenge on that one. Finally pulled it out of the hat. Went back and got a seller concession on some money, on the price. Made that deal
So you
happen.
had to retrade it. You had to retrade it to make it happen then.
I did, yeah. Well, it was going to happen anyways. It just at the right price. I mean, we needed a little more margin. So,
But let me ask you a question, Peter. So 6 months ago,
Yep.
would it taken you 2 months to still find that cash buyer? And would you have to retrade it?
Yep.
You think so? Okay.
Absolutely. Because it all depends. It's all local. I mean, again,
Sure.
if we overpay for it, even if it's in an area, see, some of these areas that we're buying properties in or putting them under contract are they're being gentrified. Okay, so they're not an automatic home run where you're going to get multiple 5, 6 bids. Sometimes some of these neighborhoods, somebody has to have some vision, knowing, okay, I can repair it, I can Airbnb it, fix and flip it, or I just hold on to it. Just depends. All right, but I have not noticed a significant difference in 6 months because if you get it at a good price, it will move. If it's marginal on the price.
So let me ask the question differently. Are you negotiating with sellers at the same buy percentage?
Okay, now here's the thing. The sellers, even 6 months ago, the sellers are still delusional, gentlemen.
Oh, 100%.
They're
100%.
They are still thinking that it's March and February, March of 2022.
So are you negotiating so have you changed your buy percentage of MAO?
Yes, I moved it. I used to be at 77%. I'm using 70.75 now.
Yeah, so that's part of it. So
Right. Why this, gentlemen? Because I need to get that even lower because I don't want to be overpaying for these because we've gotten burned. As I said, 2 out of 10, we're getting burned and eating it and having to turn it property.
But that's why you're having success still with the higher with finding the buyers because you bought them low. You're buying them lower now, right? If you were still buying it that same.
Yeah, you're right. Slightly. It's not dramatic. I mean, I haven't dropped it from 0.77 to like 0.70. Now I'm just dropping it a couple points, 0.75. So, and I'm very comfortable, gentlemen, with 0.75. I mean, some clowns are out there.
Right.
Who's 65 or 70? Good luck trying to get it under contract with a seller at that.
Yeah,
They're
well,
80, they're
what the seller wants and what they get are two different things. I think we'll find that out for sure. But here's another question for you. Do you negotiate with the seller on any other types of purchase besides cash? Are you doing any terms negotiations?
Yeah, we know this, the margins aren't there from a cash or a buy and hold buyer. Yeah, we bring up terms.
And then and how do you exit out of the terms deals? You keeping them or are you wholesaling the terms?
Gentlemen, we can't even get sellers to even want to talk about terms. They always just want to sell the property. And I know you probably don't want to hear that because that's your business.
Oh, I don't care. I mean, that's just, I mean, that's not, I mean,
you guys are the creative deal makers and,
no, but that's what, I mean, I think that's what they want and what they get are two different things. I think that's all in just framing the opportunity with the sellers because, they may have, they're gonna have to figure it out,
Sellers might think they want cash, but then when you start talking them through the process on cash flow and income and having a note, just like we do, just like we want a note, they already, if they're a landlord or a tired landlord, they already understand the cash flow game. So it depends on, they just don't want to deal with the headaches anymore. So if you have an exit, you're able to wrap it up. I mean, that's where the market's going.
But you're right. But to your point, Peter, if you're in that hot of a seller's market right now, they don't need to have that conversation with you. They'll just go find a cash buyer. Yeah. That's fine.
And the DMV guys. I mean, you guys down in Texas? I don't know where you are.
I'm in Dallas. Well, we do all of Texas and
okay. I mean,
Texas and Arizona.
Yeah. Okay. Well, Arizona. Wow, that's pretty hot.
Yeah, they're ice cold markets. Nobody's going to either one of those two places.
Okay. Yeah, absolutely.
There's deals. There's
again, DMV can fit the same thing. People are again, they know though. Again, we're going to go out and look at a house tomorrow. The guy already said he had, his phone's blowing up. He's got basically 10 people looking at it tomorrow when we go out and look at it. I mean, so that's still going on. It's a hot area. It's right outside the DC. So I can't say the DMV. It's only in more remote parts of the DMV where, yes, it's a struggle to, you probably have a little more negotiation. But again, you can't move those properties because investors aren't interested out in kind of more towards West Virginia.
Yeah, but you know who is interested in that? People that need seller financing.
That is true. No, you're right. Well, that's why I need to squad up with some folks here on the.
There you have it. It's just a different mentality and a different shift. So. Yeah. But my point is that when you're able to negotiate those kind of deals with the seller, they're not all going to fit. One size doesn't fit all. That's for damn sure. But contrary to popular belief, all sellers do not want cash for their properties. I can promise you that.
I agree.
That's one
right.
thing. So
you're right. But if you guys know, again, because we do spend a lot of time marketing, it is a big numbers game to get somebody to at least want to have the conversation about it.
I think that's changing. I think that's changing a lot more quickly than most people think it is. I'm seeing it right now, and I don't even go direct to seller, but I work with a lot of wholesalers, and this is the information they're providing to me. They tell me exactly what it is and what they're up against. A lot of them haven't been selling to hedge funds. The hedge funds aren't buying the same properties anymore, not buying the same volume. They're still buying, but they just have shifted it, especially if you're in a secondary or tertiary market. And that ain't gonna ever happen for a long period of time, but that's okay. I mean, at the end of the day, we just want to provide all their alternatives that people can use so that you can go out and get the deals done. Because what the biggest mistake most wholesalers make is they try to get the seller to take their cash offer, and instead of figuring out how to make the seller give the seller what they're asking for. And when you're negotiating at 70% or 65%, there's a big margin in there. And most of the time, it's just about putting more cash in the seller's pocket. And that's all it is just structuring it. But, to your point, sellers are typically about 4 to 6 months behind the curve. So we've already caught up. Sellers haven't caught up yet. They're still a couple months behind. And then when the market shifts the other way, they're going to be slow to get that done too, right? So that's okay. It all comes around. Look, 8 million notes just came out of 8 million mortgages just came out of forbearance in March. Okay. There's going to be a crap ton of people that aren't going to be able to perform.
And they have 30-year fixed debt that's so awesome to control, and you can provide value to them as well. You know, I'm sure you always ask the question.
Absolutely. And, the issue with wholesalers is, a lot of them become one-trick ponies, right? They just understand how to do a cash wholesale deal. I mean, we've actually kind of created a new way of doing an assignment where we literally will work with conventional loan buyers on the deal. So let's just say we put under contract at 200, we at least got to get 10 to 20% on top of that. We go out and get a conventional loan buyer, they take they get a loan, and that say 30 grand spread, we take, we pay off closing costs and other things, and then we get the rest. But you can do that with conventional loan buyers. But most wholesalers have been doing, a deal like that.
But guess what you have to do on Monday is like today, you got to look at your KPIs and you got to look at all your contracts that are coming in and all the things you're trying to sell. So if you could just add, that's why you're on this call, is to add this model to your toolbox. So there's going to be Mondays where you wake up in the, down the road where you're like, you know what, I got 30 grand a month coming in and net cash flow on my notes, and I don't really want to do another wholesale deal again, So that's why Nick and I do it.
And here's the thing, I've squatted up with a couple of local people, I've handed over some deals. They never got into the end zone. I mean, for whatever reason. So, I mean, yeah, I need some more serious players who understand this market. I like the fact that you guys are, from what I gather, you're not doing basically lease options, you're writing mortgage notes, correct?
Yeah.
Yeah. See,
Right.
There's no reason to write a lease mortgage, or lease option.
pardon me?
There's no reason to do a lease option, even if we could, because we don't have control. Are you talking about buying it, then leasing it? Or are you talking about?
Yeah. I mean, exactly. Just, go out and being, or like sandwich leases, you hear guys running around talking about sandwich leases all day.
Yeah, we can't do sandwiches in Texas anyway, but even if we could, we don't want to do it.
Yeah.
All we want to do is be the bank, right?
Exactly. I like that.
It's
I like
all
that.
about being the bank, 100%. So we want to get to being the bank as quickly as we possibly can. Now, that might mean we need to take it down. Might mean we need to borrow. We might need something creative on the front side to get to that exit. But I have no desire to do anything but finding a buyer, underwriting the buyer, providing them financing, giving them the deed to the property, and being the bank, period.
And that's why, I mean, and you probably haven't gone through a lot of the stuff, but that's why we create a first and second loan, so we can sell the first, keep the second, and get that free and clear cash flow. So if you're direct to seller, I mean, this is, you're the ultimate, because you already control you would, if you have a $20,000 or $30,000 down payment buyer behind you, how much more could you pay for the property that you're going to go look at today?
Yeah, exactly. Yep.
Because you already know that 70% of the market isn't able to get a traditional bank loan. And if you have a property that we call grandma's house that is actually livable, that doesn't need granite countertops or whatever, and you sell it to someone that needs bank financing, that isn't able to go down and to get a bank loan from Wells Fargo or Chase Bank or whatever, and then you're able to provide that, create the first and second. That's where we come along. Buy the first lien, you're left with the second lien. You have no debt. It's the ultimate. So no, it's cool that you that joined the group and you got in here, because we love having conversations that are direct to seller.
My team is all about direct to sellers. I really don't like going through realtors. I know there's guys out there said, oh, buy properties off of the MLS. I'm not into that. I like to talk to the sellers. My team likes to talk to the sellers. We want to know what you're doing, what's your motivation, why do you need to sell? And again, maybe we just need better scripting, better pitch. That's why I need to squad up. Potentially.
Well, there's a lot of great stuff out there on that front side that you can get out and take advantage of. But do us a favor, as we go later into the fall and we get closer to Thanksgiving and Christmas, when money is really, really important, I'd be really curious to see how this environment's changed. Love to hear what it is.
I know for a fact that this house we're looking at tomorrow, okay, there's no margin for a fix and flipper, maybe for buy and hold, but actually it's really, because the location is primo. It really.
Let me ask you a question. How much cash is the seller putting in their pocket when they're finished with this?
On this one, there's no mortgage. So it's about
no mortgage.
Yeah, $300,000 the guy wants, and won't take it. I just spoke to him before I got on the phone with you guys.
So he doesn't want $400,000. He only wants $300,000.
He wants 300. He knows it needs a lot of work. It does. You know, it's.
So if you offered him $350,000, he wouldn't be interested in that?
Oh, absolutely. Oh, shit. Well, he said he'd take 300, but yeah, if I offered him 325.
You offered him $350,000 and it was some now, some later, and you showed him how he wasn't gonna have to pay capital gain. Is it a homesteaded property or is it a rent? Is it a?
No, it was a primary residence for.
All right, so it's primary residence. Okay, so that's different.
But free and clear primary
What-
residence. Now I
What's
see
he
your
doing with the cash?
You're right. That would be wonderful to say, hey, look, I'm not going to give you 300. I'll give you 350.
What's he gonna do with all that cash? He's gonna go buy a boat or something?
No, it's going to go to the elderly person going into a home.
Okay.
So they need income.
So my
So
question.
they do. I mean, they are going to need that's why they need to sell it.
But do they need $300,000 to do that, or they need $6,000 a month,
There
or
you go.
$5,000 a month?
Very,
Because
very good ideas, gentlemen.
well, that's why we're talking about it, and there's no right or wrong answer. But that's why we need to know these
Yep.
things, because you might be able to squeeze giving them an extra $50,000 of it and solve their problem by giving them what they really need today, which
Well, I mean, if they got a retirement account, then they've got income, and you know, you give them $1,400 a month, okay, and that pays all bills plus whatever they have. Now they have that liquidity. Now they have income, a little bit of a down payment, and then now you're going to go off and do the same thing and sell for 400 and get a down payment and do an arbitrage that deal. It just depends on what's the affordability for that house. What would it rent for? What would be a seller finance payment for somebody in that deal? But
Absolutely. Yeah, no, absolutely. The rent would be tremendous.
yeah, what would rent be on that house, just for fun?
At least 2,500.
There you go. I mean, that's a no-brainer. Like I
well,
just
let me just, so let's, and then we're gonna have to hop up. So let's just say you give them the $300,000, okay? Which is what you're gonna do. And let's say they're gonna take all that money and they're gonna use it for whoever, and they're going into a place that's gonna cost them $3,000 a month. Keep the math simple, okay?
Yep.
So that means they're basically getting 100 months of housing, right? 300,000 divided by 3,000 is 100, okay? But if you're able to get them 360, okay, for example, and you gave them and you were able to give them 3,200 a month, okay, they're going to get an extra year's worth of payments out of that deal. They're going to stretch that money out further as a result of that. Which one do you think they would prefer to have? We don't know, but we can't assume we know what the answer is.
you got to make sure 3,200 a month works.
Yeah,
But whatever the number is, I'm just doing the math. Whatever the number is, it is. Doesn't matter.
But when it comes down to, guys, is with those whole creative deals, you know better than these, they always want to know, oh, when are you going to cash me out? I mean, because that always comes up.
It's what they want. If it's 5 years, 10 years, 15, 20, because a lot of people are like, oh, I'll pay you out over the next 30 years. Well, most people are like, well, obviously I'm going to retirement home. I'm not going to live that long.
Yeah, exactly. So,
but do you want to give your estate at that time, maybe you're passed away, you don't care, but do you want to give them a lump sum of cash or do you want to give them income? I mean, what do you want? You know?
It's different for everybody, right? That's why we ask these questions. It's why, you know, by giving them alternative options. And here's where it works best is when they don't take your cash offer, right? Because they need more cash in their front pocket. So, but anyway, you got that going on. I'm just curious to see, you know, if your MAO is going to drop it all, you know, before the end of the year. Do you think it'll go down? I mean, what's your personal, you know, gut feeling on that for your area and your market?
till the end of the year, no, absolutely not. And not even in Kansas City, where we're in as well.
Interesting.
Yeah, nope, no, absolutely not.
And then I think you're going to be able to buy as much as you can possibly get your hands on if that's the number you're buying at.
Well, again, we're trying to buy it at 0.75. You know,
Yeah, I think you'll see it because
we'll see. But I mean, look, at the end of the day, why I'm on this call is, you know, we've become, you know, guys looking for that needle in the haystack, and that's obviously becoming tougher and tougher. So that's why these creative deals, you know, could be lucrative, especially I like the fact that you're creating these mortgage notes. So,
cool.
well,
we can help you. If we can help you in any way, let us know.
I don't know how to get in touch with whoever wants to potentially squad up with us in the DMV and Kansas City market.
Yeah, just
go in
post it in
and-
the Facebook group.
Yeah,
Yeah,
put it
I
Yeah.
I just joined it. I joined it. So, yep. Okay.
Perfect. Just post it in there. We got 4,000 people in the group now. So, not everybody's on the Facebook group every day and they come and go, but yeah, just post it in there and
And then we do these calls. So if you have real life deals like this one, we'll do deal or no deals. Everyone loves the deal or no deals because then we get to actually back into how we would think through it, how the value you could provide for the seller, how the value you can provide for obviously you, and then an end buyer right there. How do you know there's not an end buyer right now lining up for 4.25 with 20% down? It's not even.
Absolutely. What's the last question to you guys? What's your pay to play fee?
The pay to play fee. What do you mean?
Well, you guys aren't doing this for free. So
Well,
what's
no.
the-
Well, I just put
the
it.
judge says I get community service credit for doing it.
Come on.
It's keeping me out of jail right now. No.
Yeah, I don't think so.
Yeah. We obviously we have our digital product. I just put it in the chat for you. And then we also have, Nick and I we're interested in buying notes. I mean, we want to teach you guys how to create good paper, and we'll buy that. We'll buy that lien. We'll buy the first lien if it makes sense. So that's kind of how this game works for us. So it's
Excellent.
good.
All right. I appreciate it, gentlemen. Thanks for
All
your
right,
time.
Peter, thanks for chiming in. All right, guys, let's
Thank you.
we'll wrap it up. We're gonna do deal or no deal next week, and we'll also bring in the gap funding option in there. So if you have any deals you want us to look at and you think might be a fit, make sure you download the most recent model and put it in there, send it in. We'll take a look at it, and we'll let you know in advance, and then so everybody's prepared. And if you are on the call and you are going to share it, make sure that you have everything accessible, because I'm not going to be the one, or Eric will not be the one that actually will be doing the screen share. It'll be you, because we want you to go through the process and do the work. That's how you get better at it and more knowledgeable in working with the factors. So until next week, I think we're on again the same time next week. If you have anything else, post it in the Facebook group. That's all I got. Eric, you anything else?
No, we're all good. We'll see you guys later. And
all right, guys, have a good week.
She put everything in the chat there. If you guys have any more questions for the CDM model, it's the cashflowdealmachine.com. So that's in there as well.
Yeah,
Thank you.
sounds good. All right, guys, have a good week. We'll see you
See ya.
soon. All right, bye-bye.